All right, so today we're going to dive into a pretty fascinating real world case study. It's all about one investor's unique strategy for piling up physical gold. And believe me, it's a journey that starts out small, but it builds on trust and then, well, it scales up in a massive way. So let's get right into it. So you got to understand at the very heart of this story is this one core belief, right? And it's one that a lot of people share. It's the idea that physical gold, that's the real money. It's the ultimate store of value. We're not talking about just a number on a screen here. No, no. This is something tangible, something you can actually hold in your hand. But that brings us to the big problem, right? The fundamental challenge that anyone who wants to buy physical gold runs into. The second you buy a piece of jewelry or a coin, you're almost always paying this hefty premium, a big markup over the actual market price. So the real question is, how do you get around that? How do you avoid losing a chunk of your money on day one? Well, the investor we're following, they found a potential answer. And it was in a place a lot of us would probably just overlook, a local jeweler. And you know what they did? They decided to put this idea to the test. So what they found was something called a gold savings scheme. Now, the concept is actually pretty simple. You basically commit to paying a fixed amount of money to a jeweler every single month for a whole year. Then, at the end of that term, you take all that money you've saved up and you use it to buy physical gold directly from them. Simple as that. Now, I want to be clear, this was not some blind leap of faith. Not at all. The investor was smart about it. They started with a cautious little experiment, a way to kind of dip their toes in the water and see if the jeweler's promise was for real. And they did it all without risking a ton of money right at the start. So for that entire first year, the test amount was a steady 10,000 rupees a month. I mean, that's still a pretty significant commitment, but it was a measured one. The whole goal was just to get through one full cycle, 12 months, and just see what happened. And what happened next? Well, this is where the story gets really interesting, because that one-year test, it was a success. And it built this incredible foundation of trust that led to, well, let's just say a dramatic escalation over the next few years. Okay, so this timeline really shows you the whole journey. It goes from just a simple test all the way to this massive multi-year investment strategy. Let's actually break down just how quickly the confidence and, the monthly payments started to grow. So after that first year worked out perfectly, the investor didn't just keep things the same. Oh no, they started to ramp things up, and I mean seriously ramp things up. Get this, in just the second year, the monthly payment immediately doubled. We're talking 20,000 rupees. The test was officially over. The real strategy was now in play. And the growth didn't slow down one bit. By 2019, it had more than doubled again, jumping all the way up to 50,000 rupees every single month. Then came 2021, and this was a huge milestone. The commitment crossed into six figures. We're talking 1 lakh, that's 100,000 rupees, per month. I mean, this is serious capital now. The acceleration just kept on going. By 2022, the investment grew another 50%, hitting 1.5 lakh rupees monthly. And then, by 2023, it hit its peak, an incredible 2 lakh rupees. Let that sink in. 200,000 rupees invested every single month into this one single scheme. Wow. So the big question, the crucial question is, why? What was the one single factor that could possibly inspire this incredible level of trust and commitment? Well, it all comes down to one massive financial advantage. Okay, here's the real kicker. This is the thing that made it all so attractive. The jeweler promised that at the end of the 12-month term, the gold could be bought with a 0% making charge. Zero. Now, compare that to the standard 16% you might pay somewhere else. That's it. That is the entire edge. And that is the power of this strategy. Think about it. By completely getting rid of that 16% charge, the investor made sure their money wasn't just getting eaten up by fees. Nope, it was being converted, basically rupee for rupee, directly into the one thing they wanted to own, physical gold. But you know what? This wasn't just about clever financial tricks or saving a few bucks on fees. Behind this incredibly disciplined savings plan, there was a really personal and really powerful motivation. See, the investor has a very clear target in mind. The goal is to accumulate a total of 4,000 grams of gold. That's 4 kilograms. I mean, that is a truly substantial amount of gold. And here's the reason why. It's not about speculating or trying to trade the market. Not at all. The goal is to provide a legacy for his family, specifically to give 2,000 grams of gold to each of his two daughters. And that right there transforms this whole thing from just a simple investment into a long-term family plan. And that kind of leaves us with a final thought, doesn't it? Here's an investor who probably ignored a lot of critics, found this really unconventional edge, and then just stuck to the plan with incredible discipline, all of it driven by a goal for his family. It really makes you wonder, in a world that's filled with all these complex financial products, could it be that this kind of focused, disciplined, long-term approach, is that the real secret to building tangible wealth?